Hey guys, welcome to Kevin Pan's Stock Tech Analysis, no gobbledygook. So on December the 5th, I made a video about an analysis on Hong Kong's Hang Seng index. So for anyone who hasn't watched the video yet, please go and watch the video, because it will provide more context about what I'm about to share with you guys right here, okay? So in the video, I mentioned about the breakout of an inverse head and shoulders pattern reversal on the December the 1st of the Hang Seng index. Therefore, be patient and don't sell anything if you're holding stocks related to the Hang Seng index, because the next target of the market could go at least as far as 20300-ish. So today I'm going to do a quick recap and a rough outlook about the Hang Seng index for the near future. Okay, so after I made this analysis on December the 5th that Hong Kong Hang Seng index will ultimately, I believe, will reach at least 20300-ish because of the breakout of the inverse head and shoulders pattern right here, 2 months long. The market was followed by about 3 weeks of volatile activity right here. And of course, all the activity has taken place on the upside of the head and shoulders pattern. Okay, so it's a continuation pattern right here. When I saw this, I wasn't over nervous about anything at all, because I know it's just a normal reaction. About 3 weeks of volatile activity, it has finally reached above 20000, which hits the high point on the 28th of December, 20100, and closing slightly weak on 19898. Well, this at least proves it's a good sign, and it proves that I was right, because after 3 weeks of activity of no direction, it has a breakout on the 28th, a new high, a recent high. Is a good sign, and I'm happy to see this. And during this 3 weeks of volatile activity, I'm pretty sure there's quite a lot of people who has done careless decisions, such as buying and selling the wrong time, namely selling too early, and then kind of regret why the market has going back up right now, and they already sold their stocks, such and such. And especially if you look at this dip right here, this low point, this dip on the December 20th, I'm pretty sure on this day a lot of people has been shaken out for good. Yep. So if they're not firm enough about knowing that the breakout of this head and shoulders should provide this sense of inner peace and calm in order to tell them it's fine, it's just immediate reaction. Don't sell anything, just be patient. You're bound to do something stupid within this 3 weeks time. Anyway, you can't blame them at all, because we're human after all, and humans are like full of emotions, highs and lows, all that, so I understand. So again, the reason I can be so confident about my original prediction and analysis is because of, I said like millions of times in my previous videos already, head and shoulders is one of the most reliable reversal patterns out there. And as long as you can find a breakout that occurred, it's bound to provide a pretty good profit for you. It will run its course according to its the pattern's own prediction. So my advice for people who are buying the Hong Kong stocks is, if you belong to the type that you're already owning quite a significant amount of Hong Kong stocks or Chinese-based stocks, you feel pressurized to sell some of your, the stocks just to make yourself feel, less of a burden and achieve a better sense of inner peace and calm, then I suggest you, if the market hits 20300, which is this yellow dotted line right here, I suggest you might consider sell some of your stocks and take profit right there. And then after you take your profit, you look out for further signals to help you set up your next buying setup plans. Okay? And in case if you belong to the type where you're not holding too many stocks, I suggest you, even if the market hits 20300-ish in the near future, it's bound to meet resistance for sure. I mean, look at the August. Look at this resistance zone right here. I mean, see all the highs, the lows, you know, all the consolidation area. You see, 20300 has a history, you know, of support and resistance, heavy ones too. So it's bound to meet resistance, and it will take some time for the market to find its way to either go up or go down, which is what I don't want to see. But if you belong to the second type, I advise you can just observe and do nothing. Hold your stocks, be patient, and try to wait for the market to go beyond 20300. Because, as I said before, the breakout of this head and shoulders pattern is more than powerful enough to bring the market much further beyond than the current position, which it is right now. It could go further up, ultimately, at least to 400-ish, right here, up to here. It totally has the potential to go all the way up there. Because in today's volatile stock market, sometimes less is more. Sometimes doing less makes you the winner. And of course, each tactic has its good and bads. Ultimately, it's your choice, it's your decision, which one you're going to pick. Today is the 29th, Thursday. For people who are slightly worried about today's correction of the Hang Seng index, I would say please don't worry. Because as we know, as we come towards the end of the year, I mean, a lot of the fund managers are actually, you know, still in vacation. The people who are actually driving the market ups and downs, you know, actually they're powerful enough, the bank managers, all those powerful, you know, traders, they're still on vacation. So stock trading, so the trading activity is bound to be thin and weak, and typically loss of sense of direction. So it's no big deal, it's just normal. Don't worry about that. What's really significant is the very, very first day, the first trading day of 2023. That's really, really significant one. Yeah, that's what's really important. Look at this RSI divergence, you know, also contributes to why we have a lack of continuation, you know, for today's market. No big deal. Volume is not too much, so, you know, it's insignificant. However, worth mentioning is this this price gap right here. A gap has been created on the 22nd of December, and the gap range is 19255 to 19475. As long as the index doesn't go all the way down to 19255 right here and fills up the gap, because if it fills back the gap all the way to 19255, this is something I don't want to see. This is a sign of weakness. This is a sign of lack of continuation to go further up, challenging 20300. As long as it doesn't go down 19255, it doesn't fill up this gap, because you can still see a clear space in between. You see right here? As long as this gap space is stay free, it keeps free, then it's a good sign that the market will further go up. Okay? So I don't want to see the index come back down and fills up this gap on 19255. Okay? So please make a note on this one. Make a note on this one. This is one of the important signals to look out for. If you really, really care about, you know, the performance of the Hang Seng index within the next, you know, the week, within the next few days, in the near future, how the Hong Kong stocks are going to perform. Is it going to go beyond? Is it really going to go beyond, you know, the previous high and break out right here and boom, and go challenge, you know, 22400 register? Okay, thanks for watching, guys. My analysis on the Hong Kong Hang Seng Index today on December 29th, 2022. Don't forget to click subscribe, share with your friends, click the bell. If you're thinking of buying any Hong Kong stocks, put it in the comment section so we can discuss about it before you get into the market. Okay, thanks a lot for watching. Take care.